there. To all the childcare providers and assisted living providers, I am so very happy to talk about this very important subject with you guys today. And this is a subject that we here at the office, we get questions about day in, day out from childcare providers and assisted living providers. And it's all about how do you reduce your tax liability year after year. For those of you guys who do not know me, my name is Donna, and I am a CFO for childcare providers and assisted living providers. So let's go ahead and dive into it. If you have your notebooks, you know I am all about taking notes. Yes, you can rewatch this video as much as you want, but I'm all about taking notes. I do tend to find that, whatever you're writing down, taking notes, it tends to stick better. If you're more of a audio learner, hey, it'll work for you as well. But again, let's go ahead and dive into what you can do so that you don't have a tax liability every single year, year after year. Or let's just say you won't have a tax liability for $100,000, $150,000 year after year. Let's talk about the reason why you have a tax liability. So many reasons why, but the most common reasons I see is that you don't have tax planning implemented, you don't have consistent monthly record keeping, and you're not handling your business in a way that a business should be handled, whether you're a child care provider or an assisted living provider. And because you're not keeping up with your expenses on a month-to-month basis and reconciling your accounts and things like that, you're missing expenses. And I always say missed expenses equal missed deductions, which equals higher tax liabilities or higher tax bills or paying more than you owe to the IRS at the end of the year. Okay, that's what I mean by that. So let's talk about the ways that you can reduce your tax liability year after year. Now, the first thing that you guys are going to have to do, it all starts with business structure. Not how much do you pay yourself as an assisted living provider or a child care provider. It gets to that. But you first want to start with your business structure. And what do I mean by business structure? And yes, that is a part of tax planning, forming your business to where it's profitable for you and that you can save in taxes. That's the most important things whenever you have a business. And a lot of you guys are opening new facilities, opening new centers, and you didn't know this information before. So it's very important to know it now whenever you're starting to open these various locations. Is business formation is the first thing that needs to be right? Because it's gonna depend on how many taxes you pay, how much can you afford to pay your employees, what type of payroll should you be on, how should you pay yourself, so on and so forth. So let's talk about the different types of business formations. There are, which many of you have heard, sole proprietors. I'm not going to get into deep definitions of these things because I'm sure you guys have heard these words a million times. There's a sole proprietor, which is one business owner. You are the sole business owner. And then you have LLC, right? You have a single member LLC. You have a multi-member LLC, which is also known as a partnership, correct? You have S corporations. It's not a business entity structure, but it is a tax election on top of a business entity structure. So I just want to stop right there because many people think that an S corp is a business entity structure when it's not. It's the tax election on top of a business entity structure, such as an LLC, multi-member LLC, corporation, etc. Okay, so that's just something I wanted to throw out there. So whenever you're forming your business, you need to decide, okay, what do I want to be? Do I want to be a C corporation? Do I want to be a single member LLC? Do I want to bring on a partner and be a multi-member LLC? Do I want to be a sole proprietor? Okay. And whenever you're deciding how you want your business to be formed, you need to know the tax implications behind each business formation. And this is something that most business owners are sitting down with their accountants speaking about before the business is even formed. Hey, if I'm formed in this way and I make this amount of money, how much in taxes will I owe? Okay, so many times I ask the question, what made you form your center this way? Or what made you form your facilities this way? Oh, it's because my friend or a counterpart or a coworker, whatever the case, they formed theirs this way and I'm gonna form mine this way. So a lot of times, the providers, you guys have no rhyme or reason as to why you're forming your businesses this way other than, you had a close friend or you had someone that you respect very much whose business is formed that way, that's all good and dandy until it comes to a point to where you owe this huge tax liability and you have no reason why. So therefore, when an accountant like myself, we come and we ask you, well, what was your reasoning for forming your business this way? You don't know, right? So therefore, you're confused, you're all over the place, and you still have this huge tax liability bill because you still got to pay the IRS, because unfortunately, the IRS doesn't care how your business is formed because they're assuming that you've done your work, you've done your due diligence, and that, you are forming in a way that's beneficial for you and not just off of word of mouth or this is good, this or that, right? So that is the biggest reason as to why you will always have a huge tax liability at the end of the year if you don't know why you're forming your business in a certain way, and if you're not forming your business in accordance to what tax benefits that you can receive, right? So let's talk about sole proprietors. Again, like I said, I'm not going to go into long-winded definitions, but most businesses, they become a sole proprietor because it's one owner, right? Some businesses become an LLC because they want that asset protection, okay? And then some businesses become a multi-member LLC because they want that asset protection on top of having partners. And then some businesses become C corporations because they feel like maybe they want to sell shares of stock in the future, etc. And some businesses, they have the business formation of an LLC, but they elect to get taxed as an S corp, which is a tax benefit, okay? That's all I'm going to say about that because it goes deeper than that. But let's just say, for example, that you are let's do a popular one. Let's just say your assisted living facility or your childcare center is an LLC. So what you want to do, okay, you form as a single member LLC. What you want to think about is, okay, someone should be going over the numbers for you. You should have a tax plan in place that says, okay, I'm going to form my business as a single member LLC. If I make this amount of revenue for the year, and if I have this amount of expenses for the year, which leaves me this amount of profits for the year, can you tell me what my approximate tax liability will be if I form as a single member LLC? And these are numbers, strategies that your accountant is supposed to be sitting down, talking with you about and letting you know, okay, this is what it's going to be based on our scenario, our tax planning scenario. This is what you're going to owe. So you say, okay, well, let's use those same numbers and let's just say I still want to be an LLC, but I want you to choose the S Corp tax election. What does that look like from a tax liability standpoint, approximately, with the same numbers, the same revenue, same expenses, same profit? What do I look to, what is it looking like that I'll owe in taxes, okay? Now, this is supposed to be done year after year with your accountant. So if you don't have an accountant, you're already starting off on the wrong foot, right? So if you do have an accountant, you're in good shape. But these are tax planning strategies, because business formation is a tax planning strategy, because depending on how you're formed depends on what type of taxes you'll pay on your business, right? So these are examples that you're supposed to be going through with your accountant so that you're able to choose what the best business formation is for you just by looking at those tax planning numbers, the approximate revenues, the approximate expenses, the approximate profits for your business, okay? And this is how you make your choices as, again, how you want to form your business and just to, maneuver things around in regards to how much you'll owe in taxes at the end of the year. And that's where it comes into, how do I pay myself as an assisted living business owner, or how do I pay myself as a childcare business owner? It depends on how your business is formed. If you're a sole proprietor, of course, you need to write up some type of document that says, as the owner of this sole proprietorship, I will pay myself in monthly draws in the amount of, for example, $1,000. And guys, all monthly draws is you drawing out of the business bank account monthly at a consistent time on a consistent day each and every month, so that you can show any type of third parties, hey, this is how much I pay myself every month. I pay myself on this day every month consistently. That makes your financial records look looks really organized and in compliance in regards to if you need to get a business loan for your sole proprietorship, etc. Okay, so that's important. Okay, now let's just say your business is formed as a single member LLC. It's kind of like the same thing as a sole proprietor. You could take owner's draws or not, because you have to remember the business actually has to be making money for you to actually pay yourself. If the business is not making money, then you can't pay yourself, right? That's typically when you have to take a loss on your tax return because your business is not making any money. So therefore you cannot be taking monthly draws or anything like that. But you would definitely pay yourself in the same way that you would pay yourself as a sole proprietor. Remember, the only difference between the two business formations is the liability. With sole proprietorship, you don't have any liability. With the single member LLC, that's why it's called limited liability company, because you have liability, your assets are protected, right? Or you're not held liable for certain things and your assets are protected. Then you get into, okay, what if I formed as an LLC, but I choose the tax election of an S Corp? That's when it gets really, really magical. That's when it gets really, really cumbersome, because of course with an S Corp, there are many things that you have to follow in regards to having a board of directors, having minutes. It's very corporate, which is why it's called an S Corporation. But how do you pay yourself as an S corporation? Well, when you elect an S corporation status, you have to be on a salary. That's what the IRS requires, which means that you have to pay yourself, not owner's draws. Like, you have to be on a salary to where you receive a W-2 at the end of the year, and payroll taxes are coming out, such as FICA, Social Security, Medicare, federal. Depending on what state you're in, you may have state taxes coming out, right? So to have an S Corp tax election, again, you have to be on salary, but you can take draws as well. It just depends on how much money the business is making, what your position is in the business based, because that's going to determine what salary you should be taking. And, any type of overage or distributions that you have written, you have to have a formal document in regards to how many shareholders it's going to be. It's a lot. So whenever you form as an S Corp, I know it sounds super popular. Everybody's saying I'm an S Corp, but there is a lot to being an S Corp and to stay in compliance with an S Corp. You can't say I'm going to be taxed as an S Corp and pay yourself on payroll for 2 months, and then for the remainder of the 4 or 5 months, you decide that, hey, I'm not going to pay myself on the payroll. I can't afford the payroll taxes. That's not how it works. Any good accountant will let you know, well, now is not the time for you to take an S Corp tax election if the business cannot afford to pay you on a consistent payroll. So these are things that you definitely have to talk about with your accountant, all right? And then you get into the C Corp business formation. That is a business formation. It's not a tax entity election like the S Corp. C Corporation is business formation, because sometimes you're going to have shareholders or what they call stakeholders, and this is where you sell stock, but you will be double taxed. Okay, that's a drawback to being a C corporation. There will be double tax. You'll be taxed as an individual, and the corporation will be taxed as well. But again, these are things that you have to talk with your financial professional about, because this is all going to fall into the problem. The problem is, Donna, every single year I owe this huge tax liability. How can I alleviate this pain that I'm feeling year after year? You first got to need to ask yourself, how is your business formed? Is it formed in a way that is beneficial to you from a tax perspective? Then you also have to say, how are you paying yourself? Are you paying yourself correctly? Are you on a salary? Are you withholding enough taxes from the salary? Are you taking a consistent owner's draw? Are you making sure the owner's draw that you're taking is actually something that the business can pay you? It's a lot, okay? And all of that has to do with you owing taxes at the end of the year. So you have to get those things straight first: business formation, paying yourself correctly, and then you will see at the end of the year the money is maneuvering in certain ways to where you're able to write off a lot of things when it comes to payroll taxes, payroll wages, things like that. Okay, so I think everybody's getting what I'm saying, how important business formation and how important it is to pay yourself correctly and to consistently pay yourself, whether you're on salary, whether you're taking draws, whether you are a multi-member LLC, where you guys are taking guaranteed payments possibly, or splitting the profits and losses of the business, depending on what percentage of the partnership that you own, it is a lot. Okay. So if this is you, if you're a child care provider and assisted living provider, and you just feel like, okay, I see where the root cause of it is, and I understand that all of this is incorporated into tax planning, business formation and paying myself correctly and the amount that I should be paying myself, my staff, etc. And I just need some help on getting back on track because, I work hard and I want to keep more of the money that I make so that I can either expand my business that I currently have or expand it in a way where I'm bringing on additional facilities, etc. So this is important. So if that's you, there will be a link below this video. Click the link and book a free, and it's free guys, a free 15-minute strategy session to talk to one of our accountants, and we'll assist you and lead and guide you and tell you what it is that you need to do to make sure that you do not have this huge tax liability at the end of the year. Because again, something I always say, guys, nobody wants to make all this money. You guys are making 7-8 figures per year, but then you're turning around and you're paying 6 figures back to the IRS in taxes, when that could definitely be alleviated by having effective tax planning implemented and just having the right person to lead and guide you and to show you what it is that you need to do. Okay, so I hope this was informative. Again, there is a link below this video. Click the link, book your free strategy session. Myself or one of my team members will reach out to you and will assist your situation and let you know what you need to do from there.